Good morning, everyone. Welcome to Admiral Markets webinar, where we take a look at strategy on this Wednesday, the 16th of December. And before we dive into the charts and take a look at the Eurodollar, for instance, be aware of this disclaimer explaining that the webinar is intended for a global audience, but it may not be suitable for everyone. Take a look at admiralmarketsglobal.com. Select your country of residence. Contact the appropriate entity to find out more information about that and other conditions and details. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Therefore, please seek the advice of an independent financial advisor. This webinar is not advice and is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you're aware of the risk involved when trading. Take a look at admiralmarkets.com and you'll find more information about the MetaTrader 4 Supreme Edition by going to trading platforms and clicking on the Supreme Edition button. And you'll see a whole list of extra features that have been created by Admiral Markets for MT4 to make trading life a bit easier. So take a look at that. Also, we have a lot of other stuff going on here, like analytics, education, as you probably know, and promotions. So you'll find a lot of info right there. Also, by the way, in the YouTube channel of Admiral Markets, where content is being added on a daily basis. As we know, we got today a big events coming up. We have some European news coming up here, but of course, the biggie of them all, maybe the biggest of the year in a way, because the U.S. has a Fed interest rate decision coming up at 7 p.m. GMT time, and of course, then the FOMC statement. And it's going to be interesting. Will we get a raise hike or not? Now, if you would have asked me in September, I would have said no, but with the upbeat numbers we've had in October recently, the market, if you look at what fund managers are saying and answering, seems to have shifted from a no to a yes, percentage-wise. I don't know percentage by heart, but definitely grew. So it seems like the market on average is expecting a rate hike today. So that would mean from a quarter to a 0.5%. And perhaps the first step in a series of new steps. But the Fed has already said that the increases will be gradual. So we're not going to see a strong upside like we've seen in other economic cycles, for instance. Sorry, my drawing tool is not working. Hang on. Where, for instance, there were multiple increases in a row. Like this, for instance, you would have like flat, increase, flat, a very steep kind of move up, maybe from, let's say, the bottom of economic cycle of 1.5 going up to 5, perhaps, right? Like the last time, early 2000s, 15, 14 years ago. But the Fed already indicated that it will probably be not something like this, but if they do increase today from 0.25 to 0.5, that is going to be smaller steps and gradual. So who knows what that exactly means, obviously, but maybe it will take 3-6 months before it goes up again, for instance. And maybe that's the max. Maybe we'll only go up to 0.75 or 1%. That's kind of the path you have to think about potentially, and today could be the day that it starts. Well, if it doesn't, it will be a bit of a surprise, because even here you can see at Admiral Markets is showing expectation is from 0.25 to 0.5. Obviously, a lot of volatility and going to be big movements, up and down probably. And I myself am staying out of the market. I have a bias. I do have an expectation that I don't think the Eurodollar will break to the downside. But with an event like this, it could go really anywhere, and it could break through 105.50, start to continue its downtrend. I have a bias that it won't, but I'm not going to trade it. I'm not interested in that, so I'll skip it. Let's see. Beverly says that I've closed all US dollar trades. No, I agree with you. I think it's better. I would not want to mess around with this decision and this rate. And I'm not even. I will close all trades, not only dollar trades, all trades. I definitely do not But I'm maybe overcautious. Who knows? Yeah, I indeed. Yeah, true. But not even the dollar though. Even all trades, in fact. Other people might say something different. I don't know, but I rather to me this seems like a very kind of volatile stuff with the first rate hike in well, it's about 8 years, isn't it? No, the rate hike. No, sorry, the last rate hike was maybe 9 years ago, even probably 2006 or maybe beginning 2007. So, but yeah, long time ago. So here's a if you're interested in that in a bit more info, you can take a look at fundamental analysis. Go to analytics and fundamental analysis, the final countdown. You can read a bit more about that. And fundamental analysis is a section that also has regular content twice a week probably. So you can take a look at that if you're interested in the fundamental side or the technical side or the wave side. All right. So with that said, let's take a look at the start off with the euro dollar. From a wave point of view, just a quick note. Yesterday I said I was looking for a pullback for more upside, and that didn't happen. I didn't get the bounce. So that's the good thing for waiting for price action to confirm a certain plan. I didn't get the confirmation, so no money lost. That's good. No money gained on the euro dollar, but that's fine. Obviously, it's a bit ironic because from a wave perspective, I already had it marked as a potential fifth wave, yet I failed actually to think about shorts yesterday because I still expected one more push up. Well, those things can happen sometimes. It's a bit ironic because actually in the wave analysis, I was thinking about the last wave and then I kind of didn't think about that later on and still expected one more push up, which didn't happen. But luckily, no confirmation of that. Price action certainly didn't show any upside. There was only bearish candles at the trend line there. So just a push lower. And that started off a bearish momentum, which is, in my opinion, either a 1 or an A, and now we're getting a bullish correction. With a news event like that, I will just say it one more time, with a news event like that, all of this could be different tomorrow. Don't get me wrong. But for the moment, this is how it looks like until something else happens. So that was the euro dollar. Let's take a look at the non-wave charts. And you can see I was looking for support in here, didn't get it, and basically a strong thrust. I kind of underestimated yesterday that it was already quite high in the resistance. I knew about the resistance. I talked about it last week and this week. Just overemphasized that it could, make that one more push, few more pips higher to 111 perhaps, and then there it would fall. Well, it didn't get there. It fell right away yesterday, making a big bearish momentum, breaking these trend lines and breaking support and falling. So perhaps maybe you were still able to capitalize on it. If not, then no problems. Let's take a look what could happen now. Now, obviously, the news event is about 12 hours from now. So it doesn't mean that the next 12 hours, the next 8 hours perhaps could still be tradable on a short-term time frame if you like. And one of those potentials is perhaps the euro dollar. But the thing is, the problem with trading now, even though it's still 12 hours from now, is that a bear flag like this could break, but it could go nowhere and bounce back right up. Just because there is no continuation, there is no follow through basically. If the market has an event like that, it's almost like the market stays neutral. And I'm not saying that it has to be like that, but there's a high chance, and the market stays neutral because there's just no willingness to, there's no anticipation of a follow through. So who's going to short at the break? No one. Price just kind of flattens and goes sideways. So in theory, this looks like a nice bear flag. but probably would not be very interested in trading it in front of the news event. So from that point of view, it there could be opportunities for this session, but I have high doubts that I would trade any of these. But I will discuss the markets and the charts with you now to see how it looks like. And you can see from a moving average point of view, the price has reached back and gone back to the long-term moving average after showing a double divergence. And as I said, I think yesterday, double divergence is important, specifically on lower than hourly chart and also the hourly chart, because if it's only a single, it's a bit weak for those time frames. Double is better. And what is the goal of double divergence? Price moves back to the long-term moving average. So that it has done that. It has completed that. Now, considering the momentum here on the 15 and the hourly chart, you can see that the 50-minute chart price is already in a downtrend. So from that point of view, price has already gone back to the long term. And normally speaking, this would be a good breakout. But in this case, I think we can see, as I already told you, a bigger correction and then probably the fall. All right, but in any case, the moving averages are providing a lot of info about setups that are with the trend. For instance, last week when we were talking about this trend line break, you can see very clearly the moving averages aligned and price above the moving averages. And often enough, in many cases, you'll see two breaks above the moving averages. Here's one, here's the second. And I think the most important is a candle close above it like this. That's the first and this is the second. Or this candle, right? Let's see here. We have a break here and another break here. But that was a big momentum candle. And then the third one here, in fact. All right. So from that point of view, that's what I would typically look for when we got a trend. The pound dollar also fell a lot yesterday and broke a pretty nice trend line here. Now, let's see. This could be still a bull flag or bear flag right in here for follow through. That's what I would normally be looking for as a continuation of the momentum that we already see here. There's a good downtrend channel. We've had this on the chart for a while. Price respecting the target and breaking kind of the consolidation here with a head and shoulders like this. Breaking support and continuing with the daily downtrend on the 4-hour chart. This is the daily downtrend. This is the 4-hour chart. And it was an important break for a confirmation that the 4-hour chart is also in a downside mode. Now it's at the support level as well, right in here. All right, so the next break could be a continuation down to 150, for instance. Right, there's a small little bear flag. Wouldn't expect a big retracement. If it does bounce here, I would not expect price to break above the 50 fib at 151. Probably the 38.2 fib is the turning spot, and price will break below the support. When we put the moving averages on, let's take a look. You will see that the 50-minute chart is in a downtrend, and the hourly too now. So a move back to the band, the 21 EMA band, and a bounce off it should be typically on average a follow through to the downside. Could be two hook backs like this. That's what I would expect. Not a steep pullback and a break to the downside. If we put a fib on the very first leg, then we can see 150, 149.75 is the next target. Let me take a quick look at this daily chart. Hang on. Pretty choppy downtrend. Yeah, that's about it, I think. Otherwise, like yesterday I said, if it breaks through this, perhaps if it does break through this trend line, something to be aware of, because that could be a big shift in sentiment, or if it breaks below this trend line here as well, and this trend line. Those are long-term trend lines, definitely, I think, worth keeping an eye on. Alrighty. Dollar yen. I didn't trade it, but we did talk about the potential for a bounce and an inverted head and shoulders here. That's why I was not interested in shorting it despite the downtrend. And that was good because you can see indeed price bouncing off the bottom here, this support level, the horizontal support level, the trend line as well, and making a bit of a rally from there. Those were higher time frames. This was the lower time frame potential pattern, and now making a rally. So here too, if it weren't for the news event, I would be looking for a break to the upside because everything is set for good momentum here. There could be a small continuation trade on the 50-minute chart. This is the first break above it. This is the second break above it. Now, let's see. How far could it go? We could put a fib from here to here, for instance. There's not a lot of space left, but let me put a fib from here to here. Maybe 122.50, for instance, could be the target, I would say. Well, still about not a bad space. I think that could be a target. Then we could see maybe, on average, we would typically see a bull flag, I think, and still one more upside. It all depends if this is a 1, 2, 3, 4, 5 or an ABC. If it's an ABC, it will hit and then fly down pretty fast because that will complete an ABC, and then that could be a 1 or an A to the downside. Whereas if this is a bull flag, it's not probably ABC, but a 1, 2, 3, and this is a 4. In any case, it's not too relevant for moving average trading. At the moment, if we discard the long term, there is a lot of momentum looking at the 8 and the 21 band, and there's a decent chance for a follow through. But I still like the pound more, I think, than the dollar yen, to be honest. But all right, audio is the in a range, and yesterday made a good fall, and I managed to grab some pips on the AUD USD downside. But I made also some loss on the Euro upside, so I didn't gain anything with it, unfortunately. But I was choppy, but eventually I did take a short when it was breaking. Let's see, I was using a different template, so I have to get a bit of a bearing where it was exactly. It was on a 50-minute chart. Wait, hang on, I don't remember. So let me grab it quickly here. Let's see. Okay, good. I found it. 15, 15, 15, 15, 15, 15. Right here. This one. This candle. So basically what happened was you got a break below this trend line already. It was based on the moving averages, but obviously the support was breaking here at this point. This level was broken already. You see that base there? Oh, that base was broken and price was hanging below it. And then it started to break this fractal as well. So it was like a break, pullback, and continuation. Moving averages were already turning and we're about to cross. So it's a bit on the early side, perhaps, if you're very precise with having a trend. But at the 50-minute chart, you don't have to really. It's not that precise. I would rather have a good trend on a higher time frame, obviously. But so we had about the moving average is about to cross, and then this momentum came, and I exited. Let's see, somewhere for about 25 pips only. Let's see, 25. Somewhere in here. So not could have gotten more. But anyhow, at the moment it's on hourly, it is in a downtrend as well. This argues the moving averages are aligned, and price seems to be respecting that moving average. 4 hours definitely choppy, remains choppy. Daily in a downtrend. So it's pretty simple to see the trend when using these two sets of moving averages. I like using two sets of moving averages. A lot of traders do, using multiple moving averages to create a band like this. Two sets of bands, I think, is very, very good way of analyzing the trend and knowing what's going on with that particular instrument. I think it's a very, very good way to tackle it and then combine some price action with it to understand when we get a bounce or break. And I think it's already a very solid method. Look for the trend, as I said yesterday. Look for a pullback on the lower time frame and a continuation within that trend. And I think you already have a very solid way of trading the markets. So sometimes there could be a lot of, if you look at multiple pairs, it could be maybe an advantage because then you can pick the pairs and timeframes that have the best trends. Does the Aussie have the best trend? No. But if I were only trading the Aussie, then I would probably keep an eye on this hourly chart because it looks like we can get a bit of a fall from this trend. Got to be careful with this support line though. There could be a bounce there. So would like to see probably a bit of a break, a pullback, and then a continuation. Maybe not the best to trade on hourly, but let's take a look. Maybe the better on to keep an eye on the 15. Not a lot of space though, so let's see. Kiwi maybe. Now I actually took a long on this, but I got out for about -5 pips. Very, very, very small loss. And I think I took a long. It was somewhere in these candles, but it was taking too long. I didn't like the length. I didn't like the fact that we didn't get a bounce here. On a 50-minute chart, it was doing this, and it somewhere about here, I was getting out. It didn't have the muscle to break it. That this was like a triangle, and the moving averages were stopping it from breaking above it. Apparently, price didn't have the power to push through it. Didn't like the chances of this happening, and I was thinking that I could always re-enter if it does show the potential of breaking above it. It didn't. It fell. So luckily, that way avoided a loss. And that can happen sometimes if price was just unable to continue with that. And yesterday I was talking about the red lines as a zone for a potential bounce. So that's why I was first of all looking for a potential bounce, and it made it quite close here. So that's why I took a long. I thought that was close enough, but then exited somewhere in here as it didn't have energy to push above it. Now, in the meantime, price is still, from a 4-hour point of view, aligned to the upside. The short-term band is above the long-term. There's a bit of divergence on the 4-hour chart though, and the daily chart is very near resistance and has a shooting star wick on the daily candle. So no, it's probably not an interesting pair to trade to the upside at this moment, even though the 4-hour chart has a bullishly aligned trend. So from that point of view, if anything, it might be reversal territory, but two dojis on the dollar CAD, uptrend on the 4-hour chart, no divergence. I think that I'm not sure what we were talking about yesterday. I'm trying to recall, but I don't remember. Anyhow, it's basically ranging. Did get a bounce yesterday. Looks set for still a continuation to the upside, but as I said, the news event is going to torment every decision here, in my opinion at least. Euro yen still making a bull flag, but resistance nearby. Euro odd. That was something I actually was looking for upside yesterday, and I closed that. No, that was actually a break-even trade. Euro odd for myself. So let's see. Yeah, because it just went flat here. That was a bit of an ugly up and down. You can see on the 4-hour chart too, it looks like a tug of war with all these candles, lots of wicks going nowhere. And I was expecting upside because to me it seemed like a retracement of this candle for a bounce. And that could still happen, by the way, it could, but it's just taking some time. 2 days basically going sideways here. But the moving averages are aligned here, so a break above this resistance could see a follow through. Or retrace back to the long term could see yet another bounce. Who at this moment is using the same moving average bands as I do? Just out of curiosity, are you using the same moving averages? Anyone in here that does? Pound Yen talked about the fact that it's in a downtrend, but probably we'll see potential for a bounce. Pound New Zealand, that's one I shorted somewhere in here. That turned into a loss. Stop loss was a bit too tight. I was planning to take it again here, but I ran out of time. I needed to leave, and I didn't want to take a trade with not enough time to manage. And then it did go for about 150 pips. A bit annoying, but okay. Now on hourly chart, it didn't look that great, so you can see sometimes you miss certain clues. This looked a lot better, in fact. Oh, if you're looking, would you like to have that indicator, Beverly? I think probably yes. Yeah, of course, definitely. I will send it. I think I have your email. Let's see if it can. Yes, I think I have it. It's Yahoo, right? Oh, okay, great. I'll send it right away. Anyone else who's interested? Because I personally really am a big fan of the asp or the character of this moving average that it changes the color with depending on the angle. I love it. And makes it just easier to look at the charts together with the fractals. If you're also interested in that, you can also get it, no problem. Just send me an email right here. All right, yeah, you can use a single, definitely use a single one as well, a single 21, a single 144, and that makes the chart look a bit cleaner. So that makes a lot of sense too. And that's the advantage of that. I use the single one to show you sometimes because I don't want to overwhelm people with too many indicators. But I personally like the bands more because it gives me a better visual reference personally. Anyone else use it? Yeah, indeed, it gives kind of that feeling for support, like a zone indeed. Uh, what I don't have any indicator that shows buy, stop loss, or TP. I just trade the discretionary. But basically, if you're using these moving averages in this template, the buy moments are, well, depending on what time frames you use. For instance, you can say 4-hour trend chart, and if it's in the trend, I will look for trades on the hourly chart. So if this is in a downtrend, the downtrend would be apparent because price is below the 21, 21 is below the 144. Then we can zoom into the hourly and look for price to basically pull back to the 21 band and close below it. So for instance, this hourly candle could be an entry. 4-hour trending, 1-hour pullback, trend pullback, continue. But I don't use any specific indicator to show me that. I just trade that manually and combine other things as well personally. But definitely moving averages, fibs, fractals, oscillator are always important things. Now Nanit uses a strategy called HARP, and that strategy has specific arrows indicating when which candle is the entry candle. That's pretty handy, and I like that too. As well, I sometimes use it. Makes it very straightforward, so that's cool. So that's HARP. That's what Nanit. That's just Nanit created that strategy. If you're interested in HARP, then it could be better to ask to send the email to Nanit, which you can find here. Right there. Alrighty. Good. So let's take a look at silver making a new low, gold not yet, but hanging at the bottom of this trend. Amazing. 13. Wow. S&P. Let's take a look. making a dash down last few days, but finding a bit of support. So making maybe a consolidation box at the moment. Oil below 40. And I'm very interested how these indices will behave later today. And if we can get maybe one of that last rallies, maybe to get a super divergence. This does look like it's setting up for consolidation. So from that point of view, wouldn't be surprised. But if it breaks to this bottom, of course, there's also the chance for a good fall. So let's see what break the market gives us. Maybe both. So I think that the live market is probably enough to enough discussion today. Anyhow, I don't think there will be some trades that I'll be interested in, as I said. So let's talk a bit about these moving averages and how that can be traded. Let's see. Here, for instance, there's an example trade I just discovered on the pound cat. So let's take a look at that. It was here. So let's take a look at that. You see on this chart we have moving averages aligned, right? We got the 144 below the 21. We got even the 8 EMA very bullishly. We had a 4-hour, very bullish 4-hour candle here. And all of that is just drifting above it. So strong trend to the upside, strong momentum to the upside. All right, then the 1-hour chart. All right, we got the same thing. Now, obviously, you don't need necessarily two time frames to have the trend. So from this point of view, the 4-hour chart is enough. So 4-hour chart was already trending. So any pullback to the moving average on the 1-hour chart and a bounce could be already enough. So for instance, here, this is a bounce. This is a bounce. I'm not sure if the 4-hour trend was already present here, but if it is, those are all bouncing spots, right? And then here too, again, a break. And then at this moment, we got the break and I was looking for a pullback. So what I did was put the fib here and I was looking for 50 fib. So I took it there and exited there. Now in retrospect, that was just a very small part of the entire impulse. I was saying that at that point, we should expect an impulse, but didn't get really as much as I maybe should have. It was 90 pips, but it went another 120 after that. Anyhow, that's one idea is to wait for a break, a good break above the moving average. Either take the break like this, or even put a fib for a bit of a pullback. Sometimes you don't get a very strong pullback. Like in this case, if you do it here, well, it's the 38.2 fib that holds. If we do it here, oh, it's the 50 fib. So using a fib like this could be useful when you get the break above it, right? A break above, preferably obviously a good candle close above it, even better if there's space between the price and the 21, like that blue circle or this green circle. In these cases, we never got any space between the candle and the moving averages. Those are weaker breaks. Here we did. In this example, we did get space, so those are a bit stronger. Here too, a 50 fib. Here was a shallow fib though. see, that hardly went anywhere. 23.6, not even that. It just moved along with the moving averages. Alrighty, and if you start fibbing this from here to here, all right, you see that was actually never got to bounce. We had a bit of a stall at 78.6 fib, and that can happen, of course, when you had a big trend like this going on, where price starts to trend from the 4th of December, and is still in an uptrend 10 days later. Eventually, it's going to stall. So we've got to always keep an eye on the moment where it might have struggled with continuing. And sometimes we might bump into a loss at the last moment. Preferably, of course, we try to avoid it. So those are all entries on the hourly chart. Now, of course, the hourly chart could be used for a trend. Then we can say, okay, this is an uptrend, and we can zoom into the 50-minute chart and try to look for pullbacks and continuations on the 50-minute chart in all of these areas. Now the 8 EMA, I always talk about 21 and 144, but the 8 is also pretty interesting to review, because the 8 is yeah, it's a nice extra. If its price is above it, for instance, like this, and bullish, it's a great extra to have. But it doesn't have to be necessarily above it. Sometimes it takes a bit of time before it crawls over it, but it's nice to have it bullish at least. That's already a good signal. So for instance, here, you see the 8 EMA stayed bearish. All right, let's take a look at the 50-minute chart. All right, let's see. This is a bit of a wacky up and down. Let's see, what time was that? So this could have been a bit of trouble if you really apply moving averages without any discretion. That could have been a loss. And a currency like pair, like pound CAD, you don't want to trade during the Asian session. So this is not something that would be interesting anyhow. But later that day, this could have been a good breakout, as you can see, and using the same philosophy. 38.2 fib, you see, and bouncing straight up. So that was a good one. All right, then you get into Asian session again, and we wake up to a new London session somewhere in here. And you get the first break, but you never really get a second break here. A bit of a whipsaw. Very slow London open that day. And yeah, that could happen with the 50-minute chart. It's a bit choppier on average. Something like this is a bit of a headache. And there could be various results on that. Win, loss, break even, depending on how one does the trade management here. This was a good break on the London Open, but I didn't take the London Open break. I took the pullback, as you can see here. But that was also a good continuation trade. That was smooth sailing to the upside. The next with the trend continuation was here. That was also smooth sailing. And here, same thing, and here, or it's about the same spot, but also a good setup. And that's it. How about this one, you might ask? That's also a continuation, but that was Asian session, would be not a contender at all. So that's, I think, basically, going through some moments. Obviously, if you have a 1 and 4 hour chart both trending, that's great, and gives it is only better, of course. If I take setups on a 50-minute chart, then I'm always a bit cautious with the stop loss, because on hourly chart I don't mind using maybe the most recent bottom, but on the 15-minute chart, it could be a bit dangerous with momentums like this. So yeah, I'm a bit more cautious with it. Let's see here on the 50-minute chart, I entered here, but I put the stop loss here, which was a bit about 65 pips. So on a 50-minute chart, that could be a bit on the high side perhaps, but the pound does move a lot. So on other time frames, on other currency pairs, this could be a lot less, obviously. Going below the 21 EMA band and a fractal, I think, is not bad. Using two fractals is probably a bit better. For instance, in these two examples, an entry here, you can see a tight one here could have worked fine, but probably would have gone here, it would have been better. Here, you see, in these cases, a tight stop loss relatively would have been fine. It would have survived nicely. But let's take a look at the first example. I think it would be difficult to avoid a loss. Let's see. Yeah, this was just a bit too much. Unless one really goes more than 10 pips below this fractal, but typically I would not do that on a 50-minute chart. So I would go a couple of pips below it. This is one fractal, this is two fractals. On average, it should be enough. In this case, it wasn't. That can happen. But two fractals back below the 21 EMA band, or sometimes even below the tunnel here. Those are all good spots, I think, for stop losses. Okay spots for stop losses. Sometimes, of course, the price is going to tag it, but in a good number of cases, price just continues like it does here. The pound New Zealand yesterday was an example where I got tagged when I shorted it here on this 50. Now, I should have maybe looked on the hourly, and I would have seen that hourly candle didn't look that impressive. Mistake probably from my side. I put the stop loss above these tops, and it actually ended up being a zigzag. And that's a bit of a danger when using a bit tighter stop loss. But obviously, going with the stop loss all the way above here is also not really doable. So probably just should have avoided entering anyhow here. Do you have any questions, perhaps? Let's see, Beverly. Yeah, that's great to hear. I think it's a very nice mechanical system. And I like trading how I trade, but definitely also find it pleasant to trade in a more in an approach that requires maybe a bit less analysis. and is more straightforward in its steps, perhaps. So I really enjoy it. I'm not sure if you see Nenet's trades, perhaps on YouTube maybe, but anyone has a question on moving averages? In the meantime, let me show you that we have webinars tonight with Nana taking a look at stochastics and MACD. Tomorrow we're going to take a look at the next trends in 2016, what we expect, our forecast, and we're going to take a look at how accurate we were with last year's forecast. Next week, trend lines. There's an extra webinar on Tuesday, applying Fibonacci sequence for targets and letting winners run. On Wednesday, how to use proper scaling in and moving average trading. So once again, no questions so far, but if you do have a question, let me know. So it's pretty straightforward. Just find a time frame you think that is interesting for you as a trend. Scan the pairs for a trending chart on that time frame. If you find one, look at one time frame higher for any potential blocks in the road, any filters. If not, then zoom into one time frame lower and take a look if there is a pullback continuation. So for instance, on a 4-hour chart, is there a trend? If yes, daily chart, anything blocking it? If no, go to the 1-hour chart to look for pullback and continuation. Let's see, Beverly says that sometimes she takes trades on the touch of EMA as long as I like the price, action, and trend. And yeah, there are traders that do that. I don't do that, but I know some that do. So I've heard of that before. It makes sense. Definitely, if there's a good momentum, I think that makes sense. Other times, let's see, she waits for the AO to have a couple of green bars or red lines near the zero line or both. No, I not only do the fractal break, I sometimes do candlestick patterns, candlestick breaks, candle closes below or above the EMA, fractal breaks, fibs, AO sometimes indeed too. Trend line sometimes. Yeah, most of the time I use the same EMAs, indeed, for every time frame. Personally, I like these, but I think all EMAs work perfectly fine. It's just the ones you accustom yourself to. I don't think there's a magical EMA formula. I think all of them could work well. It's just as long as you get a feeling for them. And I do think though that 2 sets of EMAs is good, regardless of the number. Though I think it makes sense to have 2 sets to get a feel for the difference there and the impulse and correction. In some cases, I use 4 levels. In this case, this template has 4 levels. It has a fast one, an 8 EMA. It has 21 EMA band, a 144 EMA band, and a very, very long-term one. That might be a bit exaggerated for some of you, but I think the The long-term one could be easily maybe taken away, but otherwise I think that that makes a lot of sense like this. And what the numbers are, everyone's going to have their own favorites, but I like these because of the fib levels, and I got used to it and I liked them a lot. So, but I did read a study once that said that 20 to 40 EMAs are the best. EMA is better than SMA. The study said, and more profitable. Both are profitable, but EMA is more profitable, and the best ones were between 20 and 40. So I use 21. I use the lower end of that, but anything between 20 and 40 is apparently great. Yeah, great, Beverly. Cool. Also looks like candle closes. Yeah, some things indeed. I know what you mean. Some things are just so almost automatic that it's just almost seems like breathing, right? Just do it without really thinking about it consciously, and that's good. So pound is making the break, and there could be a bit of a follow through on the pound because there is a ton of time, 11 hours before that event, and it could fall a bit before making a correction. But I'm not a jumping for joy to trade necessarily, especially on the euro dollar. I think it could definitely lack the break. But the pound dollar was a bit more bearish, as I already said earlier. All right, folks. Well, I don't want to hold you up. As I said, I'm not going to be. I doubt I would take any trades. So, from that point of view, I just wanted to show you and talk about the moving averages, which I just did, and I think that I mentioned the most important part. Target, you can think about support and resistance, fib levels too. It's really open. I would recommend using candle highs and lows for trail stops, fractals. So I think that I mentioned a lot of things. I can't think of anything that at the moment. So from that point of view, oh, we got one comment from Beverly. Let's see. Okay, let's take a look at that. No, no, no problem. I like comments, so I appreciate it actually. Let's see. Let me open. There it is. It's interesting indeed. FTSE so weak compared to Dow and S&P. Dow and S&P are hanging here somewhere. So Beverly's already in profit and wondering about the trail. Well, I let's see. It's a good question. I think using candle lows does make sense. I don't know how much space you want to give it. You could use a daily. The daily low is one option, but depends on how long you want to stay in that trade. Using 4 hour world could also be possible. These candles, these inside candles, or the main bar. Here's a bit of supply demand. Obviously, there's a chance it could make a zigzag, and then any of these levels could bounce. So putting the stop loss anywhere in here might be unlucky and get hit before moving up again. But there's always that risk. So that's a difficult one. How long did you want to expect to stay in the trade? Hmm. I probably would go with either these lows or this low. If you're happy to stay in, then I would probably go with the 4-hour low indeed. If you go below that, then a 38.2 fib bounce, you would still survive that retracement. So using this one, I think makes sense to me. There's a small little supply and demand zone too. So if you go below that, that also helps. Makes sense. All right, folks, thanks for joining, and be careful today. Good trading though, and today and tomorrow, and next week. Also be aware that the market is going to slow down probably a bit, especially on the 24th. But we can talk about that on the 22nd because I will still have a webinar on that day. So hope to see you then, and wish you all a good day. Cheers.